Good afternoon to all of you. This is Ranjan from smartfinancein.com and our new crypto analysis website is cryptosmartanalysis.com. So here we are just selling our crypto analysis software product wherein you can analyze the crypto prices with our GAN Fibonacci Elliott method. This particular video I am just making to give you a comparative analysis why the future traders used to lose money, why the future traders used to lose money in the market, especially in the Indian market. These losses, why it used to come, future traders. So many of you will be doing the future trading. I am not going with the hedging, all things. Plain future trading I will explain. So some people used to initiate the future, then market did not favor them. Then certain situation used to be get created by this process. What happens? They used to lose more money. And that is eminent. Why it happened? It is a mathematical error or it is a deliberated error. So that I will be explaining it. I will compare the same thing with one Ethereum Future and what is the difference on those two future trades. I will be explaining it. So view the video till end. If you like, you just give a like there, and if you are seeing it in our channel, you must subscribe to channel. So here my first point has come here. Suppose Nifty is at 23,374, one future I am buying. Contract value is 17,53,000. Initial margin required 2,05,650 rupees is expenses. Your expenses may be 100, 200 more or less, anything. So just ignore that. I am just adding one expenses, and this is 2,05,650 you have invested. Get into this trade thinking that market has fallen very badly and it will go up and you will make profit. With that ambition, you have entered here. You follow your technicals, your analysis, why you bought and all that is different. I'm telling, if you are buying it, you are just carrying a 17,53,000 risk. And for that risk of trade or that value of trade, you are initially paying one margin money of 2 lakhs. Broker is allowing you to open the trade. So that is what there, and this simple trade will have unlimited profit potentiality and maximum loss will be 17 lakhs if Nifty becomes zero. And if it is going to heaven, you can say 30,000, 50,000, 1 lakh. So you will be going on making bigger money. So many people think that, so my investment is only 2 lakhs. So Nifty goes up by 5,000 points. I'll be making 3.5 lakhs. It doesn't work out. If it is a falling side, somebody is sold Nifty, he is thinking that, okay, I have sold at a higher price. If it is falling 5,000 rupees, I'll be making a very 5,000 point, I will be making a huge money. So they see this margin. So this, again I say, remember this number 2,05,000. How this 2,05,000 is exploited, manipulated, or you can say mathematically adjusted, or this 2,05,000 is the cause of our failure. Why trader fail here? Because this 2,05,000 is dynamic. It will go on changing. You have no control on that. Today it is 2,05,000. Tomorrow it may be 2,14,000. Day after tomorrow it may be 1,90,000. So you have zero control over that. They have a VAR, value at risk. So based on that they calculate and broker adds some extra money for that. So with this margin is being computed. So you gave this much, the seller also is giving the similar amount. By this process it is there, and we have zero freedom in this to tell why you are taking this much of margin. They will tell budget is coming, RBI review is coming, Falana is coming, we are going to increase or decrease. That part is there. You have zero control. Next, go a little bit mathematical. So this is theoretically maximum profit, maximum loss, all these things you understood. So the margin money what you paid, it is 8.5% of your contract value. This is the exact price I have computed and I have given this. So you can say that exact price from where I got. So I will just show you that if it is there in my, so you can say it is basket order. If I go for this, and if I go for this part, you can see if I make this part one option I am not making. If I'm just going for one future, 2,05,753 now. So you can say if this is the money you require for one lot of a Nifty, this is a actual figure having no dilution in that. Now, say after you take this trade is favorable, you are happy, trade has gone against you and market has fallen by 5%. Here only the hidden story unfolds. So you have 0% control on this 8.5%, they may make it 9% also. So market has just fallen by 5% and these 5% of fall, they are charging near to 87,000 rupees as your M2M. This is got the market fallen by 5%, 87,000 of money gone from your account. So obviously you'll be saying that I have paid this much of 2,05,000 rupees I have paid as a margin. So I have the money. So 2,05,000 you paid, 87 gone. So you are with 1,17,000. But with 1,17,000 you cannot keep the position. Right? You have 5% market has fallen, but also this 87 gone. Then I will be able to hold these positions now. However, this 87,000 of fall has only released 8.5% of your margin, not the 8%, 8.5% of this 87. That much only is released. So 87,000 gone from your pocket. Now to continue after fall, to continue this position which you have paid 2,05,000 initially, you required 1,41,000 margin. Otherwise you can't continue this trade. So if I add both 1,41,000 and this 87, provided I am thinking they maintain the same margin. They will never maintain, they will increase it. So if you add both, it is coming 2,29,000. So initially you thought 2,05,000 I have given. So if a fall happens, that money can manage because margin also will fall. Na? Margin fallen from 2,45,000. It has come down to 1,42,000 provided they maintain this same margin. They will not maintain, again I say, they will increase in case of a fall. Because when you are bent, they will hit in your head. So now, if you add this M2M and this thing, you require 2,29,000. So you had only 2,05,000. Now to continue this position, you required extra money of 24,000. Because margin, you have only 1,17,000 rupees left out after M2M. So you required another 24,000 additions with your M2M or margin money to continue that position. This is where majority of trader loses. I have told you about the future part. However, if somebody has hedged with one option, what he will do? What he will do, because extra liquidity is 24,000 required. So he will be forced to bring the option to down or release some money from the option hedge, though it is not necessary to meet this thing, because all down moves are not permanent, all up moves are not permanent. So even though if you have the hope or if you have a pure technical backing that yes, After budget, market is going to be go up. You cannot do anything because you have to bring the extra money. So every time your liquidity needs increases, liquidity need increases, and that need used to be so prominent and so high. Sometimes people used to feel that it is dejected and they do not have the things to carry on, so they close the trade. So I'll give you certain example also. You can say that this is not, maybe I'm feeling wrong. So you can say this is a position, no trade is being initiated. So this is just about spread position. Some positions are there, profit loss is there, something happening today in market, all things. But if you go in all our margin needs, you will get one surprising thing. This I have just created a test case for that. So if I just go to this, it is telling this required another 41,000 margin, peak margin to be debited. Why? I have not done any trade. It was 10 days before this one. Now also this one. It is properly hedged. So everything is same. Then why 41,000 you require? This is where our problem lies. Continuously by tweaking the margin, by increasing the margin in the name of risk, where 8% you paid, market has not fallen beyond 8%. M2M is debited, so that liquidity gone out of your hand. Second, they increase the margin or decrease or tweak the margin, so you have no freedom on this. That is the reason why you will be forced to do adjustment. You will be forced to close part of position. You will be forced to take contra positions. These are the ways it is being getting exploited or mathematically manipulated, I can say. So due to this, majority of traders lose the money. Coming to my next part, if the same person goes with a Bitcoin or Ethereum future trade, so initially he fixed that 5x I will give you. Yani ki, means if I have 1 lakh worth of trade I am initiating, then 20,000 I will take as pay you as a margin. You fix that 5x, 10x, 20x. So you fixed it. You paid that margin. So say this Ethereum 3265, you paid a margin of 328, some expenses came, total you invested 363. Same event happened, say Ethereum also fallen by 5%. But what happened? This M2M is not getting debited from your account. The new contract what is there, it also having that same 5x margin, no increment. So you can say if you add both the things, you do not have any extra requirement. Same 363 USD required. I'll show you that. Why you should. I have taken some test case here. Say I have just taken one coin called the Trump coin. Trump coin, I bought it at future at $72. That time I have taken some $3 to $4. I have paid as a M2M, so margin. Now it has fallen to 38. I don't want to close this position. So what is the margin? 45. This is in the margin, not debited. So what is happening here? If you just go to the profit and loss segment, I have $34 losses. However, position is standing with the margin. This money is not debited from your account. No liquidity crisis is being created for you. So position stands. Suppose you say that you don't want to continue, $28 it will come, it will close. If you want to again top up some money, position will continue. So this is how this domain operates. So it is not a immediate debit and next day fresh money. Same liquidity retains your hand till you are not able to, till your position is alive. Suppose you don't have money, it has come to 28. Whatever money is there, it will be a loss. because entire 45.46 will be a loss, position will be get closed. Suppose if you want to add something and keep it, you still add. So M2M plus the margin you keep on adding, you still continue with the position, and that margin also by you. So here you can say that once, because its value is now 38, so I will be paying 38, 5% of or 10% of this one or 20% of this one. So my M2M also there, this is there. So no credit debit happens, it still remains. When this trade will be favorable, this will come to my hand. If I have a hedging, like you are seeing here, many options are hedging. So I am not compelled to close the position because I have an option. I can just top up my margin for some more money so that I can wait for some more time. So that liquidity drain is not happening. So try to understand the very finest underlying here. The cause of our failure is liquidity drain, then fresh requirement of the money. Here liquidity is not draining, so same money continues. Some amount of extra money, if you can keep it, the trade goes on. So you are not forced to close the positions at any point of time, or this I have told you the ideal case where this margin maintains constant. That may not be. VIX gone up, margin gone up. Tomorrow budget, margin gone up. Day after tomorrow RBI review, gone up. Again they will say we are also bringing it down. Yes, that is nothing wrong in that. You are taking up and bringing down. But the temporary liquidity issue what you are creating, how the trader will adjust that. That temporary liquidity issue is creating more kind of volume, or people are hedging more, coming, speculating more, bringing down. Lot of things is happening there. So you cannot do anything on that front. That is why we are lacking. So here, if that liquidity drain does not happen and margin is fixed by you, because you are telling 9% I have paid, so 9% beyond I cannot pay, all 9% gone in loss, position lost. Here 9% you have, 8.5% you have paid, every day you are going on giving whatever 1.1%, 2% fall up, you are going on giving, receiving, and margin also changes. So that makes the liquidity problem, or for any trade which is against you will create a financial liquidity problem. That liquidity problem causes more losses. So you do not know how much liquidity problem will be there. After 5,000 point fall, 3,000 point fall, M2M already gone, it is a drained out. It has already that liquidity gone out of your hand, but to maintain again you require liquidity. Otherwise you cannot hold the position. That is the problem. So in this regard, I have just put one program wherein you will be learning many interesting things, many things. We'll be helping you to, we'll give you our analysis software, we'll give you option strategies in the crypto, and you will be very happily, you will manage those strategies, because leverage is yours, margin how much you will give, that also you decide, and it will be how long you want to continue the things, liquidity is still there, when you want to form adjustment, everything you time yourself. Along with that, many pair trades, other things, new methods will be taught, and this program is for an entire year period, 12 months, starting from March 2025. So such a long program should not come at a free of cost. So it has a cost, and very good cost. Cost is 4,500 rupees per month, and if you are going for a quarterly payment, it is 12,000. If you are going for 6 months, you can pay the half yearly installment 21,000 per 6 months. You can enroll anytime. If you want to enroll for 1 month and go in the second month, you can go. If you enroll for 3 months and don't want to continue in 4th month, you can do that also. So that is your freedom. Then comes to that now this particular program is going to start in the March, and our software also will get. If you are interested, you can ping me here. And 25 participants I will take, and after yesterday's video, 5 people have already joined. You have only 26 remaining. Once it is filled, my video publication also will stop. My enrollment also will stop. To get it enrolled, just call in this number, enroll yourself, and these are the secrets you are going to learn. Second part is here that this is a fee you are paying. So if you want that this fee can be reduced to certain extent. So how I can do that? So these are the platforms, those who are giving some amount of referral money to us. If my referral code, what I am given in the description box, if you are using that, this referral code and opening of your account and activating it, we are getting a part of your brokerage. Here also brokerage is not a big brokerage as you see in the stock and future options. It is a very smaller fee they charge, and whatever this brokerage you are paying, one part, some 10-20% they share with us. So this money will be deducting from your training fee. Suppose if you are 4,000 rupees, but your trades and other things has given 1,000 rupees back to us. So your next time it will be costing you some 3,000 rupees. So that is also transparently maintained. And this is only 25 people we can able to easily see that. Basic requirement to start this business, 1,000 USDT to 1,500 USDT. And you can learn wonderful things and do an entire 1 year practice on live trades, and that is what you have to understand. You will earn in dollar. It is an international instrument, and having these kind of advantages, liquidity issue will not hunt you down. So you will always have the freedom to operate and hold the positions. So that is what it is required. So that is what required. So this mathematical jumbling, have a look on that. So changing this I have told you in a very simple way. The change of margins frequently through the peak margin, this margin, that margin deductions. Again, changing it based on the situation and stuff where the market is not having that behavior of movement of 8 to 10%. Market not even moves by 10%, not even yearly volatility is 10%, you are taking 9%. And in this 9% also you up and down, and broker keeps something, exchange keeps something. That makes your trading life pathetic. So I will suggest those who are professional trader, at least one part of your activities, you shift it to this crypto derivatives. This is legal. This is highly authentic. Tax also same as your F&O, 30% of tax. So no problems in this in terms of legality. You can start in a smaller way, and then after you expand it to a bigger way. Thank you very much. Thank you for your time.